the Fed wants the unemployment rate to go higher. And so that means even if today's not the day, at some point in the months ahead, we're going to get a negative employment report. And Chair Powell was very clear in Jackson Hole that he has both the will and the means to get inflation down. And to do that, he's going to break the labor market.
There's still impetus for some lingering inflation and more rising rates across the curve.
The risk asset market, equities, crypto, have bottomed. We are having a retest. And as the economic data shifts and bond yields come down, that'll drive that further, and it'll be a further hated rally because nobody will understand. We're going into a recession. Why are equities going up? Well, because they already priced the recession. It's their job to be forward-looking indicators. So that's kind of the big picture framework.
The bear market for cryptocurrencies shows no sign of stopping. Bitcoin has lost $30,000 since January and dropped below $19K. The last time Bitcoin dipped below $19,000 was on July 4, when it hit $18,600. Prior to that, Bitcoin hit $18,900 in November 2020. Now that's what typically happens in the bear market. But this is a bear market like no other, with many countries struggling with their high inflation and a global recession fear right around the corner. Now, there are just these questions in everyone's mind. Is Bitcoin's biggest price drop yet to come? Could it break into new lows? Can Bitcoin drop as low as 15K? In this video, Raoul Pal talks about the current state of the crypto market and why he fears extreme lows. He also discusses the economic slowdown, so stay tuned to know if we are in the midst of an economic recession or not, and if so, how long will it take? Now, if you're new to my channel, be sure to subscribe for more videos on crypto market, economy, and the world. Let's dive into the clip.
We find that these long duration things, crypto and growth equities, they got smashed the most. Crypto is not correlated in the longer term to any of these things. It's correlated in the liquidity cycle to the liquidity. But if you look at the chart of NASDAQ and crypto over the last 10 years, I mean, they look nothing like each other. So those are the things that get destroyed first. They've already been destroyed. As I said, the long end of growth has priced in about 32 in the ISM, which would be the lowest ISM print since 1974, which when it got down to 30. So it's been very much priced in, the inflation shock, the growth shock.
The world's largest cryptocurrency, Bitcoin, has entered a strong correction, dropping further to its June 2022 lows. Many experts, including Raoul Pal, fear extreme lows. I mean, there's a reason for fear. As of the middle of the week, Bitcoin was trading at 18,662, and Ethereum, which had been showing signs of strength as the merge approaches, has also handed back gains from recent days. The growing uncertainty in global macros, especially the falling economy, and the recession risk is putting additional pressure on risk assets along with cryptocurrencies. Stay tuned till the end to know more. Let's dive into the next clip to know where the global macros are heading.
So my big picture thesis is, from my forward-looking indicators, I do a lot of work for Global Macro Investor and also in Real Vision Pro Macro, two of my research services, on the global business cycle. And I particularly focus not on the data that's out today, where we are in GDP growth, but where we're going in inflation, where we're going in unemployment. My forward-looking indicators, which are like financial conditions that I've built based on the rate of change of the dollar, the rate of change of interest rates, the rate of change of commodity prices, from whether it's PPI, there's so many things, they are pointing to the fastest deceleration of data that I think I've ever seen in the shortest period of time. So what we're facing is a recession, which most people know, but I think the speed at which it happens is much faster than people expect. So we're starting to see some of the regional Fed surveys falling apart. But what I'm really looking at is the ISM survey, the Institute of Supply Management. That's a survey of basically buyers in large corporations and industrial companies about how they see conditions. They tend to do a very good job of tracking the business cycle. GDP follows it. Now, There's this magic number, which is 47. 47 is the level at which it has a 100% chance of recession. Now, we're still in the 50s, low 50s, but all of the forward-looking stuff is going down to 47 for the shorter term stuff, i.e. the next couple of months, we should go 47 and maybe below, maybe 45. But the forward-looking stuff gets down as low as 35. So we're talking negative 2.5%, negative 3% GDP prints. And that would be, it should be bottoming by my work by about February, March next year. So the economy is about to go off a cliff. And I don't think the market is yet prepared for it.
According to the International Monetary Fund, the world economy will grow just 3.2% this year, down from 6.1% in 2021. For 2023, its predictions are just 2.9%, slightly above 2.5%, which the IMF considers a global recession. Raoul Pal also pointed out that by next summer, the economy could get even worse. ISM could get down to 47, which is a number depicting recession. Let's hear more of what Raoul Pal has to say on this matter. But before diving ahead, be sure to like and share.
So let's go back to this Jackson Hole thing. What did they tell you? They didn't tell us anything new. They said, we really want to get to 4% and hold it there depending on the data. Well, the bond market, if I look at Eurodollars or Fed funds, they're already at 4%. So the market's priced that. So there's nothing new. So I think, okay, there's nothing new there. So if the economy starts getting weaker, because the Fed said they will be more data dependent, then we'll see the bond market starting to price in lower rates in the future. So I'm looking at that. And then the Fed said, well, they will change their mind if inflation comes down a lot and unemployment goes up. So the forward-looking inflation data is already falling fast. My work suggests it could go negative in 18 months, which is something I've been talking about a while when I've been looking at, for example, the example of 1947, when people all came out of World War II, went back into the labor force, much like the pandemic. We had no supply because nobody was making everything because everybody was at war. We had this, prices went up 20%, 18 months later, negative 3%. Then it had a rebound effect and then balanced out. I think we've got something similar playing out now, which is contrary to the narrative that we've got sticky inflation. Everyone looks at the 1970s, that's what we're doing again. Unless the Fed crush it, they're Arthur Burns and we're going to ruin it. Well, in the 1970s, we had this massive demographic boom that kicked in just at the wrong point, which was the baby boomers entering the workforce. We have the opposite. We have in 2023, the record peak number of people hitting 65 in the US labor force. And that means peak retirees.
We're in the midst of an economic recession. According to Raoul Pal, another reason for this is the retirement of the baby boomers. The baby boomers, which entered the market in the 1970s and caused massive economic stress, are once again causing a number of problems for the economy. After the fall of Bitcoin, can it reach 15K? When will this crypto winter end? Is the economy going to get even worse by 2023? What are the other factors indicating recession? Let me know your thoughts in the comments below, and if you like this video, be sure to give a big thumbs up. Also, don't forget to subscribe for more videos like this. I'll see you in my next one. Adios, and thanks for watching.